Good morning, you all. Today I am going to talk about set off and carry forward of losses, which comes under income tax law and practices. It is one of the unit which I am going to discuss today. So when we talk about set off is nothing but it is an adjustment. It has two parts. One is intra-head adjustment, another one is inter-head adjustment. Intra, we mean that within the head adjustment or within the head set off. Interhead adjustment, here we mean that between the head adjustment, between the head set off, right? Scheme of set off and carry forward. See, the procedure of set off and carry forward operations are as follows. See, that too the subject to the conditions: intra head set off, inter head set off, carry forward of unadjusted losses, order of set off. So intra-head set-off. Intra-head set-off refers within the head adjustment of losses. If there is more than one source of income under any head, the loss from one head can be set off against from the income of same head, that we call it as intra-head adjustment. Exceptions for this intra-head adjustment: income from business, and this income from business is also divided into two major parts. They are non-speculation business income and speculation business income. So if there is any loss under the head non-speculation business, that can be set off against the same head as well as from any other head. As far as the speculation loss is concerned, it can be set off only against the income from speculation. The second head, income from capital gain. See, and again, income from capital gain is subdivided into two. One is long-term capital gain, another one is short-term capital gain. Suppose if you are getting any loss under the head long-term capital gain, those losses can be set off only against the income from long-term capital. Likewise, short-term capital loss, if you have any short-term capital loss, those losses can be set off from short-term capital gain as well as long-term capital gain. And the next head, income from other sources. And there are two major heads. One is, see, regular income, another one is casual income. Regular income refers, see, we can say that suppose if you receive any dividend or interest on securities, interest from any fixed deposit or interest on debentures, those things will be appearing under the head other regular income. And another income which we call it as casual income. Casual incomes are 6. One is winning from lottery, winning from crossword puzzles, winning from card games, then winning from horse races, then another one is betting, winning from bettings, winning from gambling. So there are 6 heads which we have under casual income. And when we take this other regular incomes under other sources, regular income, see, if there is any loss under this regular income of this other sources, can be adjusted from any other heads of income. From some other head you can adjust these losses. Suppose if you have any loss under this casual income, see, except race horses, loss under the head race horses, the other losses like see, loss from crossword puzzle, loss from lotteries, loss from betting, loss from gambling, all these if you get, those losses cannot be adjusted from any other head or from the same head. You are not allowed to adjust the losses even in the same head or even from the other heads, right? Suppose if there is any expenditure which is also given in the casual income, those losses cannot be allowed. It is not allowed to adjust from the income of that particular head, casual income head. But when we talk about loss from maintaining race horses, if you get any loss under the head owning and maintaining race horses, those losses can be adjusted from income from owning and maintaining race horses. So I told you that casual income has 6 important points. One is winning from crossword puzzle, card games, then lottery, then betting, gambling, and last sixth part is race horses. So these the first five parts, even if there is any loss, those losses cannot be adjusted. But as far as this race horses are concerned, if you get any loss, those losses can be adjusted from the same head, like income from owning and maintaining race horses, right? This is the thing which we have to follow under casual income. Again, I repeat you, if there is any expenditure under the head card games, crossword puzzles, or lotteries, or betting, or any gambling, those losses cannot be adjusted or cannot be allowed. It is not allowed to claim from any other heads of income. At the same time, casual incomes cannot be used. Suppose if you have any income under the head casual income, those incomes cannot be used to set off the losses of some other head. If there is any loss under any other head, those losses cannot be set off from the income of casual income. For example, I can give you, say, interest on securities. If you have any minus balance, you have loss under the head income from securities, right? This comes under, see, income from other sources, that too regular income, right? But this loss cannot be adjusted from the income of winning from card games. If it is given, that cannot be adjusted. So this is the important thing which you have to understand. And another thing, see, as far as house property is concerned, if you get any loss under the head house property, those losses can be set off against the income from house property. Apart from that, say, this house property loss can be set off from any other head up to a maximum of 2 lakhs. More than 2 lakhs if you have, those losses cannot be adjusted. So example, suppose if you have 2,25,000 loss under the head income from house property, and income from house property you have 10,000. Now you are adjusting this 10,000 income with the 2,25,000. So you have a minus balance of minus 2,15,000. And when you are adjusting this 2,15,000 from any other head, you can take only 2 lakhs to adjust from some other head. The remaining 15,000 you can take it to the next year. You can carry forward it to the next year, right? So this is as far as income from security, income from house property is concerned, right? And when we talk about inter-head set-off, those things which I have discussed is intra-head adjustment or intra-head set-off. Now inter-head set-off, the loss of one head can be set off against income under other heads, which comes under section 71. After adjusting the intra-head set-off of losses, the remaining losses can be set off against income from another head or within the same financial year. Exceptions, loss under the head house property, as I told you earlier, can be set off against other head up to rupees 1 lakh. In other words, we can say that excess of rupees 2 lakh house property loss cannot be set off against income from other heads. As far as business is concerned, loss under the head business cannot be set off against salary income. This is very important, that if you have any loss under the head income from business, those losses, that too especially non-speculation business loss, those losses cannot be set off against the income from salary. And loss from the activity of owning and maintaining race horses, loss from the activity of owning and maintaining race horses can be set off only from the profit or gains from the activity of owning and maintaining the horse races or race horses. So this is the thing which I told you earlier. Likewise, casual incomes, winning from the activities of lotteries, crossword puzzles, card games, gambling, betting, etc. cannot be set off from any other head. Those losses cannot be set off from any other head. So as far as the next third part is carry forward on set of losses. House property, 8 years you can carry forward it. 8 assessment years you can take for adjustment. Speculation loss, only 4 years you can carry forward. Non-speculation loss, 8 years you can carry forward. Loss from owning and maintaining race horses, only 4 years you can carry forward it. Apart from that, see, there is an order. See, you can set up those losses in this manner, like current year depreciation can be claimed first, then the next is current year capital expenditure on scientific research, then current year loss of another business, then next is brought forward loss of earlier years which you are bringing right to the current year, unabsorbed depreciation of earlier years, brought forward scientific research expenditure. So this is the order in which you are going to claim the expenses or losses. This is the thing which you are going to do. So thank you very much.